Hello, everybody. My name's Nick, and I'm a novice investor. I just started investing in the stock market 6 months ago. I made the decision that it'd probably be a good idea for a learning experience at least to document my decision making so that, 6 months from now, a year from now, however long, I can look back on this experience and see where I went wrong and where I went right in terms of my decision making. And you know what? If people out there get some sort of entertainment value out of watching me build my portfolio and trying to reach my goal of 100K, that would be great too. So currently, my portfolio is at about $6,100 Canadian. I've got about 2,000 of that in Canadian and just under 3,000 of that in US dollars because I own Canadian and American stocks. Right off the bat, when you go into my Canadian stocks here, you're going to see a major loss in one of these investments, and that's East Tower Wireless. This is a 5G wireless company that I invested in on the advice of somebody else who uh, probably led me a little bit down the wrong path in terms of this. It is a long term play, but unfortunately, due to the markets lately and the problem with small companies being able to get bank loans and the higher interest rates. East Tower is not a profitable company, and it needs capital in order um, to continue to grow. And unfortunately, it's just the wrong time for that. And I bought in at 4 cents a share, and now we're down to 1 cent a share. So I've lost a significant amount of my initial investment. My plan going forward is probably just going to hold it in case the off chance that it does come back in the future. There's been some news on East Tower Wireless recently. Being a company that's under $1 million in value, it makes it really hard to find proper information on the company. So this is the only information that's come out in a while, and it's unfortunately, I think it's really bad news. The CEO of the company, I believe it's CEO, has loaned the company 90,000 US dollars to basically keep it afloat. I'm not sure if that's technically the right term, but he says due to scarcity in the current capital markets and my personal confidence in the company, I have agreed to supply the business financially with an interim loan as we continue to pursue a number of financial opportunities. And I haven't been around long enough in the stock market to know what that means. Like maybe that means there's good stuff to come in ahead, but like I don't know. That's doesn't seem like a great thing that you're needing to loan your company $90,000 to keep it up afloat. And based on the financials that I read, it takes like $200,000 a month to keep the company going. So I'm not sure what really 90,000 is going to do for them. But anyways, moving on to my next stock here. Next stock I'm actually kind of excited about. It's the Sigma Lithium Corporation, or SGML. And SGML actually was one of the first stocks I bought, and unfortunately, I bought it at like during the summer, sometime in June here, at like $18, and then I seen it go up to like $21, and it was one of the first stocks I bought, and I was like, oh wow, like it's gone up a few dollars. It's time to sell. And yeah, that was not the right decision. Sigma Lithium has just kept going up and up and up and up and up, and we've had a bit of a dip here, and I'll explain why in a moment. But this stock is just been crazy in terms of like 213% in the past year. And so this dip here is because of a bunch of reports that came out that were really negative towards batteries and stuff like that. So there was one report that came out that said, there's cities are considering banning like electric scooters and electric bikes because of the hazard for, exploding batteries. And then also Goldman Sachs came out with a report saying that they believe that the current companies mining lithium would be able to meet demand in 2023. And then they went behind everybody's back after putting that out and then did this. On November 14th, they bought more shares in a bunch of lithium companies, so they just completely went against their advice and just kept investing in lithium. So I thought that was very interesting. And so the combination of those two things kind of seem like they dipped the market a little bit. But Sigma Lithium also had a recent news report. Let's see if I can find it. Let's go here, where they just recently talked about significant progress on constructing and the construction for their plant in stage one. Currently, Sigma Lithium is operating in Brazil, and it's building a plant there, and it's just about to be finished, and they think they'll start actually producing lithium in 2022 here. So yeah, it seems like they're going to be profitable into the new year, into this next quarter, and hopefully it's going to shoot up even more than this. I do feel like this is going to be a good long-term investment, and so I'm going to keep dollar cost averaging into this one. And even though I got in kind of late because I bought back in at $50, which is the worst possible timing, which is a common theme with my investing so far. Let's move on to some of my American stocks here. Where are they? Yeah, so in general, I just bought into well-known U.S. companies. I think that's one of the great parts of investing in the U.S. market is, as a Canadian, I know all of these companies and I have a general idea of what they do, and I understand them. I mean, like, I bought 10 Coke shares. It's up a couple percent, whatever. It's a profitable business. It has a dividend, and I think that's worth it. Microsoft. Microsoft was another one that I purchased here, and I think people were crazy for selling it. Like, you gotta think like, well, that's 1 year, but let's go back to the summer here. Like in the summer, yeah, it was like 280 or even more at points, and now it's dipped down a bit. But it's a $2 trillion company. Windows is on almost every computer. Microsoft has so many different faucets in terms of its business models, its business model in general, and it's a good long-term hold, I think. And then yeah, and then my last U.S. stock is Visa. As a young man, I have gotten myself into credit card debt, and the it's taught me the incredible power of interest, and you got to be making tons of money in this credit card business, and I think that Visa is going to be around for a very, very long time, and they're probably going to keep evolving. I think I read something yesterday about Visa increasing its dividend, and I think Microsoft also increasing its dividend, which that's great because I'm holding these equities just for security in my portfolio here for the long term. And yeah, that's pretty well much where my portfolio is at this point. I think these are my deposits. I think it averages out to about $1,200 a month I'm managing to put in there. And my long-term goal is to reach 100K in my tax-free savings account. It might take years and years and years to do that, but I'll probably make more videos in the future, documenting my progress and my failures, and try to be as transparent as possible so that if people get some sort of entertainment value out of it, they can see an honest look at how I progress. Anyways, thanks for watching. Talk to you guys later.